Hi, this is Monday, the 8th of June, and this is the SPX Outlook. For the coming week, it's been a crazy market. If you look at the recovery from about a month ago, we were around 2,800, and now we are on 3,200. 400 points in a month. This is just unheard of. If we look at the recovery from the March lows, it is now around 90% recovered. It is not clear whether in the real economy there will be a V-shape type of pattern, but definitely on the market, and that was completely unexpected. Considering that there's been a massive amount of liquidity injection, rates are extremely low, and we can have doubts about the NFP figures last week. This looks very irrational, and because volatility is still high, that erratic behavior leads to extraordinary movement. Well, not extraordinary, as high volatility make those moves fairly normal. Still within reason if we look at a bell shape type of curve. So this is a little crazy. Let's just focus on this chart. Here, these lines are not 100% correct. They were drawn on the 1 hour chart and they do not expand well on a higher time frame. So maybe I'm going to redraw them. So this is the bottom of the channel. This one I'm going to delete, this one as well, and I'm going to just clone these ones and place them around here. This one I'm going to delete as well. I'm going to clone this one again. Okay, this is more or less what the channel looks like. I could look at a wider range by placing one about here. Okay, so looking at this channel, the market actually looked at breaking the channel here. It was about midweek last week, around just about 120 points lower than the current highs, and it jumped to break the 31.25. Surprisingly, not only it went up, but it went up by 2 times the usual 40 point quantum or gap. So 31.25, 31.65. Incidentally, it looks like it's a support level now, and it went all the way up to 32.12 or higher. Surprisingly, maybe this resistance line hasn't moved. So we have to look at this as a possible one-day wonder, a crazy reaction to some news, and market could come back to its sense. And if it does, we'll have to look at 31.65 as a support level. First, we will look at, of course, the resilience level around 31.85. And there's a conjunction of a number of support levels on 31.25 now. So if this one is tested for support, or at least if you have maybe higher lows, but I mean, the market doesn't go south of this level, we can consider that the trend is still bullish for a while. That would be surprising unless this indicator is wrong. That happens sometimes. Nothing is perfect. And we can also look at bounces of these channel boundaries, multiple channel boundaries. On this time frame, we will look at the salient levels. And basically, if the market now breaks 31.25 very abruptly, it could actually confirm this one and drop lower. But at this point, we have to assume that this is a very strong support, basically a resistance turning support. And if we look at this pattern here, this fib pattern here, we have two other support levels here, 31.05, 30.80, and we would need to draw a longer pattern here. That would be a very, very strong support around 30.40, 3,000, and maybe 29.35. Incidentally, that used to be the fib recovery level from the March fall. We can identify a number of levels, and in the meantime, try and go with the flow, no matter how crazy it is, because the momentum is definitely very bullish still. So now let's have a look at the longer time frame. Of course, this will not draw well on this time frame, but that's okay. Here we see the crazy bullish momentum here. Here as well, the resistance hasn't moved, which could indicate again that we will get into some bullish congestion or congestion on these levels. And it's not clear whether the market is really ready to go back to all-time highs around 3,400. But sadly, it is possible. This is a crazy recovery. So on none of these time frames, we can see any reversal, although profit taking would certainly be in order. So now for today's outlook, those lines don't draw again. Okay, I will delete this one for now and maybe redraw. Right. So something like this, I could draw a higher boundary. We have definitely moved from the lower channel to the mid channel, and it could go back to the upper channel that we have seen before, but that dates back quite some time ago. Here we can see that we are busy testing the resilience level. The market will look for direction from there. Again, it would make sense to consolidate at least to this 3165 and maybe lower. This on this time frame, clearly, although we see that the resistance levels has moved sharply up now to the 3281 with a stall level on 3240 on this time frame. If there's any bounce, it will definitely aim at least for this one. So at some point, I will draw a channel line maybe around here. So for today, I would suspect at least some congestion. The market taking a breather. Considering also that we've got FOMC on Wednesday, it would make sense to wait for direction from macroeconomic data. With a massive liquidity injection, no room for rate cut. It is not clear how much higher it can go unless, of course, we have earnings, but this is not earnings season. So this is a very difficult time to try and predict the market. And when we don't have any clue, the only advice is to go with the flow and check for support levels. Go with the flow, i.e. assume the continuation of the bullish momentum and go with and just check this very salient points here for possible profit taking. Straight reversal is very unlikely, but a return to some reason, a return to this channel would be sensible. Okay, that's it for now. Next video will be on our current trades.